Good morning. Good morning. So, right now, the market has done something completely random because the market is random after all. And I say that, and I'm laughing. So, overnight, yesterday, we came down and clicked that previous point of control, or previous value, or previous VWAP, developing VWAP, and overnight we expanded range down to the 3-day back. We've created a sandbox here over the last 2 days between the 1-day back above and the 3-day back below. And we've gone from previous developing up to the 1-day back, back to the 2, up to the 1-day back, back to the 2, up to the 1-day back, expanded range down, took out the previous developing and went for the previous full, and now have buyers that took it back to 2. Take 2 off the map because it's in the middle, so 0 is the one that matters here. But 2 is a price check in the higher time frame. It's the over under, but it's old. So we went from 3 back to the 2 1 2 0 stack, and then 0 gives us 1. And the potential is to sell 1 again back to 0 or break out and continue higher. And that's where we're at. Downside potential back to 0, back to 3, expand range and look for 4, or break out and continue higher. Intermediate time frame is pulling back. Developing time frame is up. Higher time frame is up. Historic time frame is up. But intermediate time frame is absolutely pulling back, which is the whole idea of the 1-day back being that upper edge. So we have to kind of trade within that context. Holding for above that upper edge, potential to rotate all the way back down to 3-day back. So if I could get a trade-off here short of the 3-day back previous developing here and holding for the moon, I would say this would be the next best place and holding for the moon. If I could take shorts, the short would have been here and now it's here. And you can see we tested the previous days developing and we've expanded range this way. So we did the same thing here, tested the developing, expanded range, tested the developing, expanded range. This is now the outside edges of the sandbox. Very clean. So we have the intermediate upper edge, the intermediate lower edge. That's just the balance from yesterday baked into this rope here. We have the 2-day balance here baked into this fatty here. We have the 3-day balance baked into this rope down here. So the potential is to keep price checking across 2 to 3 until we break out of one side or the other. We do have CPI print tomorrow. And so think about what this might mean in the context of CPI. If the market's going up, if uh, the euphoria of the potential for new leadership in the country and lower inflation and reducing federal debt and all of those things, if those things are still driving this market higher, this whole consolidation here could be accumulation. If all of those things are done and the euphoria is over and the mask is off and we realize that she's not as pretty as the makeup made her appear, um, this move up here may be done, and this could be a consolidation to start clicking down back to this historic time frame edge. And so we've got this long multi-day expansion higher, and now the algos are unloaded, they're empty, and they could be accumulating to start distributing down to lower prices. So don't know if that's the case, but it certainly is the potential um, to come back to here. So we'll just watch this one price ladder rung at a time back to here if that's where we go. So currently along from here would have been best case scenario in my view. Uh, Along from here in the ETH back to here and potentially breaking higher. The reason these candles are going from red to green is based on delta. So the delta from the overnight session is baked into this line here. The delta from the overnight session plus yesterday's session is baked into blue. So when the session delta is higher than the session delta plus yesterday's delta, the candles go green. If we can't hold green, the theme is red right now. If we can't hold green, that's delta rolling over and in alignment with all of the sellers from here. So wherever it's red. So right now we're actually in a kind of a pullback scenario in the market. We've been pulling back. The delta is green for or red for 2 days. We were unable to hold green here, which gave us that short, the one that Ra took yesterday, the 0 day back short. That was a failure to hold delta. Delta rolled back over to the red side and we folded over. And now we have sell delta um, dominating. Again here, short opportunity. Again here, short opportunity. Counter trend trades long. So counter trend would be any trade that isn't the right color. So yeah, we have the price click here and that's an opportunity, but it's counter to the current trend, which is red. If this folds over to the green side, then it's saying that we're in alignment with the current trend. That's it. And it's just a suggestion, just something I'm looking at. But that's why they're green. It's because the session delta has fallen below yesterday's delta plus the session delta. And you can see that in the crosses here. So if this 1 day back test here is a rejection of higher prices here and here, this would be an optimal short entry for a continuation down to take out the 3 and head to the 4. And that's a big if because that's counter to, it's with the intermediate trend, but it's counter to the developing trend, which has been up. It's counter to the higher time frame trend, which is up because we're price laddering up. With the exception of the 1 day back, we're above the 2. So the only one we're not above is the 1. So higher time frame is up, intermediate time frame is pulling back, and historic time frame is hella up. Yeah, no worries, Ra. It was just something to consider. So my current read my current read on the market is at the intermediate upper edge, at the developing upper edge, potential to return to the developing lower edge if we fall out of that, potential to come back and retest the 3. If buyers step in, break it out of the developing upper edge and the intermediate upper edge, the fuel in here then is from the ETH sellers at the intermediate, at the developing upper edge, yesterday's sellers at the intermediate upper edge. So we have two forms of fuel here. We also have two sides that could double down here for short continuation. So the key play of the day is going to be, can we get below the average participant from the ETH? I'm going to make this a little fatter because I'm having a hard time seeing it. Can we get below the average participant from the ETH? If we do, can we get past the buyers baked into the developing lower edge and start squeezing them out? If we liquidate these longs down to here and find new sellers piling in, that has the potential to take on the sellers that are baked into the the 3 day back edge, the 3 day back developing, the 3 day back full session. If we get below here, then we can start liquidating longs down from 4 days ago, up to 4 days ago. So when I asked about optimal trade entries, this would have been a great long yesterday at the close. This would have been a great short. This would have been a great short. This would have been a great long. And this is a great short opportunity. We can see that these worked out. We don't know whether this works out or not. And ideally, we want to see the delta roll over here from green to back to red. And once we see that delta roll over and the selling continues, we can look for more downside. So right now we're at a location, but there's still buyers left in the market. So the future is uncertain. The opportunity is here. There's a perfect location, but we need the market to cooperate. Old, traded through price action, far less relevant than new price action. So new price action being this price action here. So even though that 2 exists and we know it's there, the people we're trading against are the people in this leg, and they're all baked into the VWAPs right here. We got to get through there. The easy move is down to here. It's going to be work to get through here, but if we get through here, we can see some downside. If we can't get through here and buyers step in like they did here and here, then we can look for a test of that upper edge. You're welcome for the delta candle color. Don't read too much into it. I mean, I'm working with it. I'm trying to isolate like what's happening. I'll highlight a couple of things just for shits and giggles here. So you can see the breakdown right here of the delta, and I'm on the subchart here. Same thing down here where the delta breaks down below. That's all that's causing the candles to change colors. But the rejection of the full session delta at yesterday's delta, they're shorter today than they were yesterday. That's what this is saying. So if we're taking them out, this potential to squeeze anytime we get below, and then when we get above, potential is to squeeze too, but we're at a location, so it's going to take a different kind of movement. It's going to take like committed buyers. We already have committed sellers baked into here. And the same thing will happen on these higher time frame uh, picks to a lesser extent. If we get below this edge, we start squeezing out the buyers and sellers from, it was 4 days ago yesterday, but 5 days ago today, we start squeezing out those longs, but it's older delta, and a lot of that is higher time frame participants, hedge funders, 401kers, mutual funders. So they're not running stops. There's no vulnerability there. So we get below it, we push down, unable to hold it. This turns it back into more of a long scenario, not a trigger, like, oh, get long, but just an awareness that we couldn't take out the sellers from 4 days ago, and now we're back above them, trying to press higher. So reading the delta, um, just the delta alignment here, we're more short today. So yesterday up here, where when price was up here, there was more positive delta than 1 day ago, 2 days ago, 3 days ago, 4 days ago, and 5 days ago. And then sellers came in and the delta rolled over to less than 1 day ago. Now it's more short than 2 days ago. Now it's more short than 3 days ago. And here it's more short than 4 days ago. And then it recovered and went from more short to more long than 4 days ago. That's the read on this. But we're still shorter than we were 2 days ago, 3 days ago, and 4 days ago in today's price action. So the delta has went from being above stair stepping up to now it's starting to stair step down. You can see we came through and left that, rolled that delta over. So in the historical time frame, we have historic time frame is up, higher time frame is up, intermediate time frame is pulling back. If I had a choice, do I want to take a long from 3 days back or a short from one? I'd take the long because that's in alignment with all the time frames, all the higher time frames at that point, with the exception of intermediate. But the intermediate, aside from developing, the intermediate will be the first one to roll over and go the other way. So we had delta break, oh shit, we had delta break above here and go green for a second, and now we've rolled back over to this side. I'd probably note this as a neutral check. But the rollover at this location says a little bit. This is a better this is a better look for the short here because it's telling me that sellers from the full session are now aligned with sellers from yesterday's session. And that's a product of being at the VWAPs too. You know, this is the volume weighted average of all price. This is the basically the VWAP of all market sellers. Think of it that way. And so they're aggressively selling the average price. So we got a delta check at 23 here. We've got VWAP at 24. Delta check at 23 and a half. We've got the VWAP at 24 and a 2-day back stomp at 25. And again, the 2-day back is old volume, been traded through. We're really trading against the volume in this leg here. And so if we can get past, I wish these things would, I wish these would, ah, there we go. I wish they would, I could get these white ones to go to the back. They always end up on top of everything and I have to like reset. So to the downside here, we have the 0-day back and then the lower edge. And if we can take out the sellers that buyers at this lower edge that came in here, and in here, then we have more downside ahead of us. So I hear a lot of people talking about like wanting to trade the ETH, and I like the ATH um, because VWAP wise, that 1 day back is like such a great level in ETH to at least sell back to zero, um, or buy the 1 day back on a pullback to it. Like the ETH, I don't want to say never violates the 1 day back because it does, but it does it like if the 0 day back, the full session is stacked on top of yesterday's full session, then you can expand range to the two or the three, whichever one's on the either other side of it, um, and you just treat like the 0 1 stack as the 0 day back, and then the two or the three, whichever one you're going to, as the one, um, and it's the same thing. But that 1 day back, like overnight price action almost never rally. I mean, it takes like a global event or something for price to break through the 1 day back in the ETH and keep going. It's got to be on some kind of European news or something that I think the market is already priced in, and that's why it's doing it. But this is a pretty solid trade. The 1 day back to um, well, first of all, back to settlement and close if you can get through the zero and the one. And we talked about this the other day. This is going to be a like this VWAP setup is outside of time and space. And I know like a lot of people think, oh, well, we're trading volume. But if you're trading like yesterday's high, yesterday's low, um, yesterday's point of control, those are all time-based elements. Um, so you're actually not outside of time when your targets are based on, you know, a high of day that occurred at a certain, within a certain time parameter. When the market starts trading 22 hours a day and there's no RTH and no ETH, when the commodities markets are open 22 hours a day and the futures markets are open 23 hours a day, you're not going to have an IB stat. You're not going to have um, overnight highs. There's just going to be the high. And so, like, all of the people that are trading those systems are kind of going to be fucked if we can't hold this down red and find buyers above here. We can keep going. Um, all of those people are going to be, they aren't going to know what to do. If their bread and butter is like taking the IB continuation trade, they aren't going to have a trade to take because there won't be an IB. And so, in many ways, I actually think that what we're doing here is just really light years ahead of like the average retail trader on most levels, but particularly on the level of, like when the market changes and it's different. Um, like the VWAPs have already baked in the difference. So we already understand how it's changed, why it's changed, what the upside and downside parameters are, expectations and potentials. There's no adaptation to the changes. It's just this is the way it's always been here. You know, there's no signposts that are time based to worry about. Market profile is completely outdated. Volume profile replaced that when volume became available in the market back in the like 80s. So market profile is time based and it's just an approximation of volume. I never really understood why people still use market profile. Well, volume profile I don't think is outdated, but I think the strategies are sound. A lot of people use it and with great success. I think VWAP has completely changed the value of market profile, and if you've found a way to harness uh, VWAPs, and I think I have, uh, I think you have a different understanding of of uh, price action. And one thing that I never understood about like volume profile is, yeah, you got like this low volume node or this high volume node, from a micro composite from 6 months ago that you get some kind of price response in that area and it's close, it's not like spot on, you know, and you, you hear people go, "Oh yeah, it hit, the micro composite from like 37 years ago, LVN, and look at it rotate." And it's just like, that is completely irrelevant. Like throw a VWAP on the chart. It rotated off of this one day back VWAPs, the outside edge of the intermediate sandbox. Like, duh, can't you see that? Most people are still, looking at that profile. I don't even have a profile on my chart. The only chart that I even think about profiling is this one. And the only reason I would profile it is like in a situation where we pulled back here and we get to here and there's no VWAPs. The VWAPs are all right here. So that's the outside edge of the VWAPs right there. So I'll look at microcomposites and naked virgin points of control. I don't even have it on this chart. I don't. Oh yeah, I do. I'll look at the microcomposite VPOCs to have targets to shoot for up here in this space. So there's one here that would have been a target. And I'll just turn these on. And so these would be my upside targets where there's no VWAPs. And that's the only time um, I'll even look at profile market profiles. And it's just because there's nothing there. But I value the retracement levels here to target like upside. So even if there's no VWAPs up above here, we do have retracement VWAPs that I can see in here. And those are the ones I want to get aligned with to go higher anyway, because I don't want to be taking trades, in thin air. I want some kind of higher time frame structure to lean on, and that's where the VWAPs are going to come in for me. But VWAPs are very precise. Like most people trading market profile didn't see this, they don't see this, they don't see this, they don't see this, and then the range expansion to here. They see we took out the swing here. But this would never have happened unless this were here, in my opinion. Like this range expansion to here had nothing to do with this swing low here. It had everything to do with this VWAP here. I gotta take this. So buyers above the 1 day back open the door to higher prices. Sellers at the 1 day back take that off the table. We have a we are at overnight high. We have developing VPOC P high up at 62%, IB high at 65% stats. Let me just check here. This looks wrong though. Yeah, we're higher in range, not higher out of range. Try that again. Jesus. Set overnight high 75%, overnight mid 80. Uh, Previous point of control 65. Sellers at the 1 day back open the door to 0 day back, 2 day back stomp, and sellers below that open the door to a retest of the 3, and then I would start to immediately think about range expansion to the 4 day back if we fell out of there. So we can certainly come down and find buyers again and just stay inside of this sandbox that we've created here between 1 and 3. So we're getting some rollover in the delta. I'm not going to say that it's a short, but we got a rejection of the 3 day back delta. Um, so we're in up below here. We're in alignment with 3 days ago's delta. We're below it. Below that, below the 4 and below the 1 would be alignment with shorts on all of those time frames. We still have delta up here um, where buyers are still baked into this from 2 days ago. If we can get above here, we would be in alignment to the upside. But if they come in and sell it down and reject this edge, this edge, this edge, and this edge, that would open the door to a recheck of this 5 day delta down here. And we don't have to necessarily come up here. We already rejected that level yesterday, so this might be just rejecting this might be enough. The real over under here is the today's delta against yesterday's, and in that scenario we're above yesterday's delta. So those are the people, the most recent people that we're trading against. Everything else is a different fractal. Looks like buyers are trying to take this thing up. We'll see whether we can pop the top off of this or not. and whether we can hold it above here. I like the long side because of this price check in the overnight here, which is aligned with the higher time frame, the historical time frame, and now above 1 day back, the intermediate time frame. So we got 35.5, there's a previous point of control, 39 previous value area high, and then P high up at 46 and all-time highs up at the moon. There's a point of control check. Anticipate some sellers here. Previous value area high has a pretty solid stat at 70. We got developing lining up with the 1 day back for a potential stomp. Real strength in the market. Will fail to check the developing. So a word on delta. The short here turned red. It failed to go red and turn or stay red and turn green. Change of context. Able to hold green and start making new highs. Doesn't mean we're going down. It just means that, or going up, it just means that we have a temporary change of context. We just made a delta check here on the sellers from buyers and sellers from 2 days ago. That's the upside delta. On average, the highest delta in the market we just checked. We're still we're still above the 1 day back. Potential to stomp that. Or or just ignore it and keep going. Looks like so leaning upside, potential to pull back to developing 1 day back. If we were to fall under 1 day back, that opens the door to zero and then potential to either go back up or fall out of zero. Testing the developing VWAP is kind of the key right now, or holding it if we don't test it. The average buyer right now is above yesterday's average buyer. Not the average full session, but the average developing session. Average developing session buyer includes all of the hedge funds, 401ks, like they all just printed at the open. So if they align to the long side in this opening swing and the market on open orders, retail's going to sell this thing down, and then ideally we would realign to the upside. And that can come from literally anywhere. It can come from developing 0 day back or the higher time frame click down at 3. Stomp incoming here. Pretty strong still. The expectation would be to grab the liquidity at VWAP for a continuation higher. If the market doesn't need that and goes higher, it kind of says that the market is positioned to the long side to me. If we come down and then take it higher, it would say the same thing. If we came down, gave it up, and pulled back, it would say that the market isn't quite done positioning to the long side or isn't interested in the long side. Uh, we have market breadth 1.25 to 1 to the sell side in the ES, 1.68 to the sell side in the NQ. So ES being slightly sold, NQ being slightly bought. Looks like the ETH sold off in equities markets overnight, and they're on the rise now, kind of bouncing back. Facebook, Meta, Nvidia leading the charge up in NQ. The rest of the market flat to down, with Tesla leading to the downside. down about 2%. This looks very bullish to me if we can't take out the developing VWAP and the 1 day back. So we get our price check. We've got our upper edge here just below the 1 day back. Got another. We've got the developing upper edge at developing VWAP. We've got old volume here baked into this rope here. Potential to squeeze them out. If we get below this, potential down to the zero, and we have the delta check that happened here. So we broke above, and now we've broken back below that delta. We've already cleared out the delta from 4 days ago down here. If we fall out of that, it opens the door to the delta from 5 days ago, and that's a long way down. That's about 3,000 contracts worth of delta down to that level. So quite a difference than inside of this is almost balancy here, where this is a range expansion delta. So watch the zero here. If we fall out of the zero, then I'd start looking at a clean check of the delta. Like over here, we didn't quite test it. Excuse me. We didn't quite test it. I would look for a clean check where we get into that delta and then either climb back above it or can you continue down and start heading down to this more balanced delta here. And this is from 6, 7, 8, 9, and 10 days ago. So if we can hold above here, then more upside. If this caps us down, we can either stay inside this range here or fall out and head for here. That's delta price, upper edge, breakout continuation, upper edge sellers rotate back to the session mean. Waiting for the delta bars to go red. That's going to happen when the pink purple line crosses below the blue line. Currently the trend is up, but that can change. And even though the trend is up, it may have already changed and the lagging delta crosses hasn't indicated it. So it doesn't mean anything, it's just a suggestion. We do have some pretty right stats above. Previous value area high up there, previous high of day is up there. %68 stat on the IBH when it prints. 61, so they both have pretty good stats individually, but statistically favoring an upside move versus a downside move by 7%. So back at this developing upper edge, unable to extend range to the downside and trying to push this upper edge here. So buyers above this edge squeeze out any sellers that came in here. We're already into the sellers from one day back, so there's still fuel above here from sellers from yesterday. So either new sellers come in at the edge and smack this thing down where the target would be 0 day back, if there were a target, and buyers above here, continuation to new highs, and then we have stats for previous value area highs, pretty righteous stat too at 70%. So we still have 57% for a P high, 70% for P value area high. We got the point of control, that was a 65% stat. And that's it for statistics for the upside. So value area high is kind of the fat stat, and then punt up to P high and all-time highs. I don't know which ones I'm on. There we go. So mean reversion on the session is 0 day back. That's also a stomp from the closing swing here, from yesterday's closing swing here. If we get below this, all of the short longs that came in here begin to get liquidated. If we stay above it, longs from here are right, shorts from here are flucade, and that keeps us inside of this developing sandbox. So right now, the technical developing sandbox is here. The theoretical developing sandbox is this upper edge here, down to here. And I say technical and theoretical because this is range expansion on the upper edge, and if sellers come in, this edge will merge in with the developing VWAP, and that will become the upper edge. This is temporary and likely to merge back in with any downward price action in the same way that this merged back in with the lower edge. Now, if buyers come in above here and above here, then these two edges don't come together and they actually get wider apart. But the anchor of the opening swing, the higher time frame participants, the market on order, open orders, all of that liquidity really cements that developing VWAP as an important level. So we had a slightly bullish check there. Back underneath that delta check now, or at the delta check for a recheck. So we have a bearish check here, a neutral to bullish check here, a neutral to bullish check here. The delta sandbox is balance between these two and a falling out of balance if we come underneath. So sellers coming in pretty hard here. We've lost that 4-day back check, so bearish now. And we're starting to print some red candles because of that cross that's taking place right here. So something to keep an eye on. If selling continues, then the next delta check is going to be down here. And I didn't mean to make this red, um, as if it is some kind of ill omen, because it's not. It's just a fact of where buyers and sellers exist. This one here, though, we can call red. So we have red here, we have red here, we have red here and here. You can start to see that these red checks are starting to outweigh any upside checks that we've had and open the door to a return to that 0-day back. And if you look at the 0-day back delta where we caught the bounce, or I'm sorry, the 5-day back delta where we caught the bounce off, it was at the 3-day back check. So the potential is to come down, take this out, and if we lose this level, then I would start to think maybe a return to the 3-day back is in the cards. If we catch a bounce off of this level, then that opens the door to a retest of the two above. So being able to pin bot back and forth in between here. This is hard selling, like delta wise. This is delta selling alignment here to the downside. There's our 0-day back check. And now if we fall out of this zero, that opens the door to lower prices. This is a delta check here, so we can watch for an over under, or if we see continued selling. I said chelling. So that's the check. Candles are red. Context is down. There's a context change here. If they go green and turn back to red, that's a confirmation. If they go green, turn back to red, and then go to green, that would be a reversal look, but right now it's hard selling, and you can see we're starting to make some room between the delta from yesterday plus today and the delta from just today. We're down almost 1,000 more contracts now today than we were yesterday. So the next delta check is going to be down lower here, um, down down in this kind of balancy area between 6 days back and 10 days back. There's all sorts of balance down here. Price wise, we've fallen out of the bottom. So a rejection of 0 opens the door to a retest of 3. If we can get back above 0, that puts us back inside the developing sandbox, and we can chop around some more. So losing the 2, couldn't hold 1, back to 2. 2 opens the door to 3. 3 opens the door to lower prices, and the potential is to stay in balance between 1 and 3 without falling out. These are the tough decisions that we have to make. So we lost the developing lower edge at 0 day back. We've rejected the developing upper edge and now back underneath. The potential is to continue to price check lower or to come back into the sandbox, climb out of it, and look to test the 1 day back above. Currently, the context delta-wise is down, noted by the red bars. Raw, we've talked about this a bunch of times. I'm going to use a smaller VWAPs. The the propensity of the market is to put in a high early, drop below the 0 day, and then put in a low somewhere. We are currently at that kind of pivot point where we've tried to put in the high, now we're below the 0. Selling below the 0 is a rejection of those higher prices, and then we look to expand range to the downside until we find willing buyers, and that might be here or it might be down here. And maybe we already found them at the 2 day. So currently we have uh, developing purple, yesterday's blue, 2 days ago's red, pretty much in balance, 31 to 26, so a 5 point spread on those ropes. That's a 3 day balance shaping up right there. Rejection of that 3 day balance opens the door to return to 3. Think of 3 as 3 days ago balance, or acceptance of it, potential to retest higher. I think that's the best we can do right there. So you can see the buy off of this intraday rope. It doesn't change the fact that this is the big magnet down here, but this is an interrupter. So we've already traded through this. You can see recent price action took that out, but that's a retest of a higher time frame level. In the same way that this is a retest of a higher time frame level, the difference is this is an outside edge test and this is buried in the middle. So noteworthy potential rotation off of it. Next price check is down here if we take it out. But the full pull trade here is from upper edge to lower edge. So if you're going to trade this thing like an algorithm, you're going to trade it from here to the developing lower edge. Fall out of here opens the door to complete from here to here. If we fall out of here, it opens the door to trade from here to here. So this is the upper edge under every circumstance, developing upper edge, intermediate upper edge, and higher time frame upper edge, all baked into here. We're trading from the intermediate to the intermediate. Well, first of all, developing to the developing, and then the developing intermediate to the developing to the intermediate lower, and then from the developing intermediate and higher to the higher lower. And so those are the full trades with their full potential are from this edge to here, and then from this edge to here, and then from this edge to here. And once we fall below here, we're in that price ladder, and that constitutes price exploration, and the potential is to keep clicking down to where? Anybody? Bueller? Bueller? The potential is to keep clicking down all the way down to the historic time frame price check where we broke out from. So we have, when we talk about higher time frame price ladders, the higher time frame price ladder ends here, right at the historic time frame price check. So the potential is to come back and come all the way to here and still be higher time frame, historic time frame bullish. In fact, we could come all the way back to here and be historic time frame bullish. So the only thing that's rolled over right now is the intermediate time frame, and only by one VWAP. So we rejected 1 in favor of 2. If we reject 2 in favor of 3, then we're intermediate time frame bearish by 2 VWAPs. Not Doesn't change anything on the historic time frame. Doesn't even change anything on the higher time frame. The higher time frame doesn't get bearish until we lose this level here, and then we'd still be bullish on the historic time frame, but would be bearish on that higher time frame back to here. So that's how the fractals break down and how you can kind of narrate your way from one fractal through it into another and keep yourself aligned with whatever context develops. Got some management opportunities in here. You can have your stop above the swing, high of day. You can have it above the upper edge here. You can have it up above the delta reversal here. You can have it trailing down here, above the lower edge here, above the price check here, the price check here, the price check here, or be out. Lots of options, and you can see them all. It's beautiful. It's a beautiful thing. Get another pop off of that same VWAP rope. Higher time frame, less relevant than current time frame. Developing upper edge is dropping down. Potential to come back into the developing sandbox. Break out the top, continue higher. Sellers at lower edge, sellers at developing, sellers at 1 day back. Keep the higher time frame price checks below alive. Back to the 0 day back. Opens the door to the developing upper edge. So all we've had here is range expansion on the developing lower edge, potential back into the developing sandbox, and then potential for range expansion on the high side of the developing upper edge. Developing balance, yesterday's balance, 2 days ago's balance inside, and 3 days ago's balance below. Seller absorption at 21.24. Not following you there. Are you thinking from like a trigger perspective or lots of bids at? Oh, I see. You're saying they bought sellers absorbed at 27. I have. Uh, I I don't see any significant, like to me this looks like it's going down. I don't see any significant buying or selling to suggest otherwise. Average prices are we've pushed up and sellers have come into the market and they're pushing down. I have targets below for retest and then targets below for range expansion. So I won't even consider long side until we hit a retest of this outside edge here at 3-day back, and then potentially range expansion down to the 4-day back. And that's going to really depend on like what this delta does. Right now, we just have selling delta, pretty hard selling delta on the day. And if we take out these levels, I don't even have delta from. It's another one of those things where it takes a lot of resources to calculate them. But if we lose that 10-day back edge, um, that's the average delta from way back here. And so we're going to come into that really quick up in here somewhere. But if we lose this, I don't even know where the next one, 11 days back, 12 days back, they're all baked into this big group of fatties here. So they're probably pretty tightly spaced below. This area here I think is going to offer some support, and that's going to depend on where we come in these fractals here. So if we haven't clicked this outside edge before we get to here, I would look for continuation as long as this edge hasn't been clicked. When we click this edge, I think there's a potential to roll up. And even this one here, so this isn't just one delta check. This is the 6 and the 10-day delta check here. So potential to rotate up off of this, and this could be the end of it right here. I have no idea. But this is a price check of 3 days ago's developing session average buyer. The thing is, from a market standpoint, in a liquidity grab standpoint, there's no liquidity at this level. So either it's just retail selling it down and the algos don't need the liquidity, or we have to get into a liquidity pool that offers some new liquidity. So we got into this one already. And here we are back at that same one again. So if this doesn't need the liquidity, this sell-off is just retail going down. If the market actually needs the liquidity, the next pool is down here. If we get through this, then it's down here at the 4-day back check. Are you saying when you say seller absorption, are you saying sellers were absorbed, or are you saying sellers absorb buyers? Sellers absorb buyers. Uh, yeah, I mean I see some absorption like right here on the way down. Sellers were hitting it pretty hard, but I don't know, like I don't really know what that means. I like maybe from a triggering, if you're gonna like look to activate to find some scale potential. Um, those are some useful things to look at. Um, like if they absorb and then they can't hold price higher, a potential rotation. I see that happen quite a bit. But from a higher time frame perspective, it just seems like not that one. It seems like the 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 rejection of 1 day back and now the rejection of 2 day back suggests to me that the market is looking for lower prices. So I'm trying to like interpret where the market needs to go to find liquidity, assuming that it's in search of liquidity or places to transact, and where are those going to happen? So if it wasn't at the 1 day back, um, then the two. If it's not at the two, then the three, and if it's not at the three, then the four. And so just looking at where all the liquidity in the market actually exists, where the fuel is, and then assuming that the market either wants to liquidate its short position or get aligned with a long position, which is essentially the same thing. Um, it doesn't matter. They're looking to transact there, and so I'm trying to look at that higher time frame perspective and like how can I get aligned with that, and when does that end? Does it end right here at this price check here? Well, I personally don't think so. I think the market's going down right now looking for liquidity, and we didn't come into a liquidity pool that hasn't been tapped. And so I think the next liquidity pool is underneath overnight low. And then if we find continued selling there, then I would say we could get some liquidity out of the market here. And then the next real big pool is down at the 4-day back. So let's just say Goldman Sachs is looking for this thing to go up and take out all-time highs. They want to go up with a bunch of orders. It makes sense to go down to the 4-day back, get that liquidity, and then take that up to all-time high and redistribute that on the way up. So that's how I'm looking at it. And I could never do this. I could never look at it this way, like trying to trade, you know, a bag of groceries or a car payment like on every trade. I just couldn't do it. But sizing down has like allowed me to look at this market completely differently. And that's not to say that someday I won't be able to size back up. I just don't have any desire to size up because I think emotionally it turns you into a scalper. And I took a short from 1 day back, and I've still got the short from 1 day back. I'm looking for range expansion, um, and I added on that short as well. So I've got a pretty good average. I've taken some money out of the market. I've got a pretty good stop that I'm willing to give back, and I think the price check is down at 3-day back range expansion, and then I'll reassess from there. But that's kind of how I'm looking to trade uh, now versus 6 months ago. I was trying to just hold for a rotation because I had more size than I could stomach, and like eating a 5 point rotation was painful. And now I'm actually just looking to add to smaller positions and scale in and out. So I worry less about things like that, like absorption and like I don't know what that means. It doesn't really mean anything to me, in fact. I notice it and I see that there's a result of it, but after that small rotation, um, then the market kind of tends to go where it's going to go anyway. So now we're coming into that 3-day back proper. And this is the point where I'm going to start really looking at managing this trade because this is the retest of a level that we checked before. So I want to see the market run this through and take out this overnight low, and then see what happens after that. If sellers continue to hit it really hard, if we get range expansion on the overnight low with uh, no buying, certainly I anticipate buyers coming in here and trying to take this up. And so if there's no uh, retail response off of overnight low, I'll let it I'll let it poke up a little bit, and then I'll grab a stop right above it. So right now I'm just using these micro rotations. This is range expansion here on this rope here. This is range expansion here on this rope here. So I'm looking to come back to these areas and see what happens. Do we rotate from here to here, or do we find sellers and continue down? And then I can say, oh, am I willing to, go all the way up to 21, for a couple points risk to find out if we're going to blow out of the bottom of this thing, and just kind of keep in mind, the idea that if 3 fails, it opens the door to 4. So I'm not just trading for the 2 ticks to get the 3, I'm trading for the 2 ticks to get the overnight low and find out if sellers are coming into this market, continuing to come into this market, or if we're done. And we're going to know that if buyers come in here and retail is able to impulse this thing up in some meaningful way, that means that the algorithms aren't opposed to it, and they're going to allow it to happen. So the liquidity is going to come in down at overnight low. The freshest liquidity available in the market is overnight low, and then if we have continued selling, I'll look really close at that. Does the delta keep going down, or does it curl back up and then start to move back up to take on this 1-day back level? 1-day back plus today. So if today's average can get above yesterday's plus today, then we start squeezing out the other way. Or at least have the potential to. It can get above it and then sell it down. But I'm also looking at the reordering here of these delta levels. So 2 days back is now stacked with 3 days back. The average 2 and the average 3 are here. 1 day is below 2 and 3, and today's is below 1. So this has really got a downside lean to it. But of course, buyers can come in and rotate this thing up. That doesn't change the context of the day, but that might change my willingness to hold on to an upside move. So if this level fails, the potential is back to this level, and that would be taking out all of the range expansion on this rope here. Now we have a new rope with new range expansion, and this appears to be holding up. So sellers are continuing to beat this down, unable to get above this consolidation here. If they do, it opens up the door to this one. And what I really want to see here is the sellers come in and hit it hard, taking out this delta. This is the liquidity the nearest liquidity in the market that's left. So this is average positions of including today, but really more 7, 8, and 9 days ago. So if the market can come down in here and clear out that liquidity, that might be all it's looking for. Because remember, we had 7 days down to our historic average, 8 days down to our historic average. So we're kind of at the liquidity level of the average person here. If we lose these levels, then we're into historic time frame liquidity levels, like older liquidity. So we got another retest of this balance here. So we got a 6 and 10 stack, and now it's a 6-10 developing stack. And we want to see this come down and keep taking out these liquidity levels lower. We've got a P-low stat at 13.5 for 36%, overnight low stat for 12 for 52%. So neither one of them are super high probability stats. pretty choppy down here. Definitely not the place to start being engaged, at least not for continuation lower. And right now I don't have a reason to think about continuation higher at all. So we got another wick down, and now we're at the 3-day back proper. This is a retest of the same level we clicked in the ETH. Now we expanded range down to overnight low down here, and that would be the next potential click lower. And then that's where I really want to make note of what it is we're doing. Are we expanding range at that level, or are we seeing buyers come in and a big impulse up? So we got delta rejection. We flirted with it, and now below it, next check to the downside is to get into the liquidity down here at 9, 7, and 8. And the potential then is to come up to here on the upside and climb above this, where we have today's liquidity as the next check higher. Yesterday's plus today's, the intermediate. And it's worth noting that the intermediate time frame liquidity has now gone below 5 days ago. The 2-day back liquidity is still above the 3, but only slightly, and the 2 and the 3 are above the 4, but only slightly. And they move a little bit weird. So you'll see the developing session, this pink, will move up, and the yesterday's plus today's will move up, but the pink is moving faster because it's got less weight to push against. So it eventually would catch up to the 1, and these older ones here will stay flat. So like if we had delta for say 1,000 days, it'd probably be just like a based out line. You wouldn't even see up and down movement in it because it literally have like maybe 1 billion contracts have traded in 1,000 days. So a couple hundred contracts intraday wouldn't even budge the line. So everything's moving down, but the near delta is moving up faster and will eventually catch the next ones up. And so even though the 1 is below the 5, it can very easily go above the 5 because the 5 is weighted by more volume. So if we see a rotation up on the intraday, we'll see a rotation up on the 1 and it'll take out the 5. So just something to keep in mind as you're looking at these, if you're looking at them, is that when one goes up, they're all going to go up. It's just that the nearer ones are going to go up faster than the further out ones. Okay, here's our push down now and into that liquidity. And so now we're going for this old liquidity here. Anyone who got long here that isn't, and this is old. This is up to 9 days old, up to 7 days, up to 8 days, but all the way back, it's all affected by the last tick that just printed. So if we go below this, the average person from 9, 7, and 8 days ago starts to become backwards. If we stay above it and start clicking off higher and then get above this, that would be a context change on this selling for the day, intraday context change. And I have a pretty good pool of liquidity too in looking at Bookmap. There's pretty old liquidity. It's been there most of the day, down to about 6,010. There's another level of liquidity down to 6,000. And of course, more will come into the book as we move down, but that's the lion's share of the liquidity in the market right now is kind of above 6,000 and below 6,060. We still have a fair amount of liquidity down to the 4-day back check, but it really peters out down to the 5. So just kind of looking at that available liquidity pool too, where is the market thinking it's going to go, because a lot of that is speculators, like with their limit orders. That liquidity is just people's limit orders down there. That's where they think the market's going to go. And most of them are probably wrong, though there are some people that are right, some machines that are right. So I like to look at price action too, and look at differences in price action. So this is very different than this. This is somebody changing contracts here. This is still different than this. This is definitely different than this. So this is what I want to trade. This is what I want to avoid. So back to our price checks. We've got one here, and then potential to come up and retest this one. And if this one gives, then potential up to this one. So we got 19, 18, and 16 and 3/4. And it's starting to really neck down here in all of this choppiness. So either retail is buying this, trying to take it up, and the algos are saying, no, we're not going up, or the algos are accumulating and retail is selling down into it, trying to keep this thing going down to overnight low. And you can kind of expect this. Like, think about what's happening here from an algorithmic perspective, if overnight low is the end of it and they want to like get this liquidity and let then take this market higher, retail is selling into them and they're buying everything retail's got. And the only reason they'd be buying is because they were maybe thinking that this is as low as the market's going to go, or at least um, they're going to unload a good portion of their position because they're not sure how much lower it's going to go. So if retail is selling this down into them, when they're done filling, we can either see the market move lower or we can see the whole market flip around and start buying this up. So 3-day back at the edge here, and we just got a delta cross on that 6, 9 to be aware of. There's definitely some buyers in here. There's some buy absorption down here, and the potential is then to check this 19 and then above 19 up to 21 and 3/4 and above 21 and 3/4 up to 0 developing. So you can imagine what retail is thinking right now. Just think about like all the trading rooms out there that are thinking overnight low. The volume profile folks that are like this rotation, we're going to get the outside edge of this LVN, we're going to trade back to the, is there a VPOC down here? Okay, to the high volume node. There, there's all sorts of people positioning to try and take this down that have no idea that we just clicked the 3-day back level and that this might just be accumulation and we may be done to the downside. That they could be selling that, but like activating down here to the short side does to me just doesn't make any sense because you're you're activating into a level like that may be a level that you'd be better off buying. So I have a hard time getting engaged here. The engagement place was at that 1-day back failure. And then again at the 0-day back rejection. And that doesn't mean this isn't going down. It just means that there's not enough range to really justify getting into a trade because it could come back and kick you right in the teeth. Now, if we get below this, then we have some downside potential. But I'm just not sure I'd want to engage here. So stop above 19 and 3/4 now. Actually stop above 20. So I gave it this move up and then I took my stop and dropped it on top of here looking for lower. And this is the trade management I was talking about. I want to give it an opportunity to go up and then fail. And now I want to see this fail and see range expansion to the downside because if this gets taken out, then it's probably, well, it's the next check up is going to be 21 and a half and then 25 and a quarter. Now, if I'm not willing to put my stop 5 points up here, then this is the logical place to put it. And if not here, I probably would have been better off just taking it off at the 3-day back edge. And so by holding for more than this edge, I kind of committed to at least letting this thing poke up or running my stop even higher. So my original stop was up here at 22, and then when it pushed up here and sold, I dropped it down to here, and that's all I'm now. Now I'm locked into a stop here. I won't move it back up to here. So getting this kind of basing out here, over, under, over, under, over, under, over, under, but in the context of being delta today being less than delta yesterday, so overall with a bit of a short bias on the day. And then decision time again because retail buyers anticipated at overnight low here. So I want to see what happens. And I have to decide how to manage this. The delta price check is 16.5 on the upside. We have VWAP at 16.75, and then we have the 3-day back stomp rejection from previous day's VWAP just above that, or 19.75. So I can leave it at 19.75, or I can drop it, or I can take it off at overnight low. That's the other option. Is okay, anticipated buyers. Do we get a big rotation? Am I better off just taking it there or holding for 6,000, which is the next downside? Look in 6,000 because that's the edge of the liquidity pool, and then I reassess. And we've seen this many times before, where the market comes down, it sells down, it gets to, the 1030 reversal, and then gets bought up to developing VWAP, comes up short, and then full sends, to continuation sell. So like trailing a stop down here, you might lock in your profit on the trade, but we might have, 4 days back is a long ways down here, and that is the next place that I would anticipate buyers and liquidity. So it makes sense to keep swinging for that. But I mean, I've got I don't know how many ticks it is. Well, 600 ticks. No, is that right? 600 ticks into this trade? No, 85, 240 ticks into this trade. How much of that do I want to give back to find out? Is that right? That's not right. It said 240 ticks. 53 ticks. 53 ticks into this trade. So I'm going to give it this 19 and 3/4 swing, and then if we make a new low here, I'll probably jump down and take that delta check at 15 1/4 and the swing at 16 1/2 and move my stop down to there and just lock in the rest of this. I want to see I want to see a a big fit of selling come in though. I want to do everything I can to like let that happen before I commit to putting a stop. Because I think once we get below here, now we're into older stop positions. Turn these off and we can see what we're at. So the historic edge is at 872, and the average delta from what are we at? We're below 10 days ago. So the average delta from 10 days ago is tied to this VWAP down at 5870, and I don't think that just because we're below that delta, that we're going to return. It's not like some kind of leash, back to 10 days back, but it's just saying that the average position from way back here, their delta is quite a ways up. And so we're definitely have the potential to start squeezing out. Every one of these levels could provide fuel to the downside, and also areas where participants might double down on their double up or double down. So, market pushing down. I want to see I want to see this really hammer into that overnight low, and I will likely give it once we get into that overnight low. I'll give it this edge here, which isn't going to be much, 16 to 12, so 4 points. But I want to try and see if this is going to go lower. Um, I have my eyes on that 4-day back. I could go for this range expansion. So we have the retest, the micro retest here, and then range expansion here. I could probably take that, or I could stay right above the recheck level. Whatever it is, whatever you choose, you have the levels, and you know, like, okay, I'm giving back 2 points here, I'm giving back four here, I'm giving it back six here, eight here, you know, of 10 up here. You can make that decision, and you know where the price checks are. So typically what we see is range X, a retest, and then range expansion. Micro range expansion is going to be here. If the range expansion fails, we get a retest of the retest. So if this retest fails, range expansion to here, that's the next potential. So one, two, three, one, two, three, one, two, three. Higher low, the retest, the range expansion. If range expansion fails, retest. And then above that, range expansion up to 21 potential. I can hear it now. VPOC, VPOC migration, VPOC. 3 day previous day VWAP test there. That's the over under on the 3 day. It's a very coarse edge. So range X to lower edge. Retest, range X, back to lower edge or back to retest. Okay, taking that retest now, or range X location. See why range X? It's old. It's been traded through. It's already been retested. So it's still relevant, but the next retest comes up here where we retested it. This is an old level that got traded through, but it hasn't been checked in relation. This is it right here. Want to see what happens on the follow through here. So 15 is my stop. I'm going to give it that. I'm going to give it this 3 day back check from below. I want to see some follow through, and I will kill this trade if we don't get it. So is retail allowed to take this up, or does the market say no, we're going lower, we need the liquidity now? And now I'm in full trade management, so using delta checks, micro delta checks as stop locations. There we go, new selling at the low, so that's heartening. safe spot at 15, relatively safe anyway. Easy mode up to 3 days back. This is range expansion, so the potential is to come up to 15 here. And there is a large delta check at 16.5 if we come to that. So 4 days back is the outside target with the liquidity edge at 6,000. So we have some levels to pay attention to. Uh, Still up to 3 days back potential. That's the easy money. So we have retest, range X, outside edge here. There's our retest. This is range X up to 12 and 3/4. So 12 and 3/4, we're going to want to see sellers step in there. And the potential then is to come up to 14 and all the way up to 15. So range X on this structure here, we've eaten that up. Range X on this structure here ends here. Range X on all of this ends here. If we get buyers above here, then the potential is to rotate back up to retest here or range expand here. And this was a range expansion and it's now a retest location. And then range expansion moves down to here. Remember where that liquidity was? Right there. I need to get one more minute on this. Shoot. 4 minutes, 5 minutes. Oh, no. 280, 340. Okay, so we're at the edge of that liquidity. That would be the micro, like that is getting all the liquidity. If we come below this, it's because the market wants to come here. If this is enough liquidity to satisfy the market, then we find a bounce here and we just go full send to the north. So this is a level where we need to consider like, okay, did the market get enough or is it actually coming down here? And my thought is if it didn't get enough here, then it's probably coming down to here, but it may rotate significantly in the process of getting to here. And so like that's where the trade management decisions come into play and what makes, trading hard. So this level here opens the door to range expand here, range expand here, and retest here. And then retest this. turn these off so I can screenshot this. Tell you, there's a lot of shit to do. So what we want to see as sellers here is we want to see the market break this down and take out this swing. That would tell me that we have a pretty good chance of filling this space in here, at least down to 6,000 where that liquidity rested. Now, I we're we're on borrowed time here as far as I'm concerned. My trade was to the 3-day back and the overnight low. So if we can hold that, um, that's that's money for me. I'm looking for range X to hold, range X to hold, range X to hold, retest to hold. I'm not going to tell you where my stop is, but I'm going to tell you it's not at the moon because I now have even more MFE built into this trade. So what was I at? I think I was at 53 before. I'm at 66 now. Wait a minute, I'm reading that wrong. 53 ticks. 160. Oh, no, I have 167 ticks in open trade equity. So I don't want to give half of that back to find out if we're coming back to developing VWAP. So I'm managing this in the best way that I can. But if these range axes fail, the retest is the next location. I don't know why this thing got moved, but I think I'll just delete that for now. And you can see where the delta now is. We talked about uh, now having taken out, and I don't have, there's certainly delta levels down here. Um, but I don't have any delta levels below. It's just too resource intensive. I have targets below. And surely we stopped at 10. There's probably 11s in here, and 12, and 13, and 14, and 15, all the way on up. And we could use them to judge uh, like potential downside checks in alignment with buyers and sellers from those locations. But the reality is the ones that matter are the developing full and the 1-day back plus developing, because that tells us the relationship to buyers and sellers on the day. And so if you remember, we come back in the day and we look up here and we talked about if the market is selling down because by virtue of being below 1-day back and we go green but we can't stay green and go red, that's saying that sellers have taken over into that leg. And so that's the only one that matters, like intraday wise. Now this can give us a really good idea of where we're at compared to 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days ago. But as retail traders, we're not gonna go, oh well, we're below 8 days back, so I'm gonna take a short and put my stop at all-time highs. Like that's not how we're gonna roll. So the only practical crosses here are the zero being across the one, which is what the candle colors are all about. These are incidental and just kind of like things that I'm looking at, like, okay, well, we take out the average schmuck from 6 days ago and now seven and then the eight. And we've already taken out 9 and 10 days ago because those days were actually selling days, not buying days. And now we're in alignment with these selling days. So 9 and 10 were sellers and they were right. So they just got saved. Like all those average people who were selling, way back here, they were short down here. Their average, the average position just got like rescued. And they're like, oh yeah, I was right. I was right on the short. We're coming back, if they held on to it. I don't think anyone held on to it. I surely wouldn't. There's a brain expansion test there. There's another one here. These are super micro. That's the last, the probably most relevant one. And then we have the retest from here, whoop, right there, and then the retest here, right here. So safer, safe, less safe, less safe, less safe, less safe. If range X doesn't give it up, it opens the door to return to here. So we should move through these, and the retest is up here, and then here. We got a retest of that delta now. So coming back into the 789, and then we have the 610 above. So this retest failed, and now we're back to this retest. And if that fails, we go to range X, and that range expansion is coming from this consolidation over here and dropping down. So the downside wants to see this retest fail. If we come above that, then above this retest, then it's got the potential to go all the way back to developing an upper edge where we can sell again. But context change uh, potential, if we come up to 0 day back and then hold this edge, then that would say we've found the buyers and we've gone low enough. I took my stop down here on the first range X, just in case anyone was wondering. I didn't even give it this, this is the outside edge here. That would have been the most conservative before the retest. And this is a 3-day back developing VPOC check here. And we can most certainly be done to the downside. It's going to really depend if we can get below this 11. This lower edge here down at 11. If buyers come in at that lower edge and take it higher, we could be done on the downside. We do have a check at 18.5 up above, and then developing 0 above that. And we still have a 4-day back check below. Candles are red for a reason, but all good things come to an end. And here we need to see what happens at 11. Sellers come in hard at 11, and then we're back on the short side and banging down to 97 and 6,000, which is where that liquidity pool is. So that's all I got. That's all I got. We'll just let this thing go. Well, that was a pretty clean rejection. So doubling down at that same retest level here. And we're back on that same potential down to the 4-day back check below. That 4-day back could be the previous day's 4-day back here, or a full push into that liquidity all the way down to the full session 4-day back VWAP. If this edge gives it up, we've got range X from higher time frame back here to here, and then a full retest of that edge there. So this micro edge gives us range expansion to here and a potential retest of the same edge that sold up here. If that gives it up, potential range expansion up to this range X level here. And then there is always the potential to return to developing balance up here. Oh no, oh no. Here we go now. All right, falling out of the bottom again. So rejecting the three, and this is coarse, not something you can necessarily align with, but you can certainly align with the micro price action, either the rejection here or here. You just get like worse positioning. So we got the retest here, sent us back to the edge, rejected the edge, sent us back to the edge. You can see this is the better trade here, more range. This, you can get a scale here, but now your stop is here rather than up here. But there's potential in it. Uh, Failed the edge, you can use that as a trailing location. Here, even if you got long here, you could still use that as a trailing location, or short here. You could use that as a trailing location. The potential is to range X, range X, retest at any time. Downside target is going to be still in the 6,000, the whole number. Potential down to here, and potential to do exactly what we saw yesterday off of the 3-day check, where they bought up the 3-day developing VWAP here, took it to 1, sold it down to the full, took it to 1, sold it down to the full, and now we're on a trajectory to first the developing and then the the full down at 4 days back on a trajectory too. That doesn't mean we're going there. It just means that that's the full pull is from 1 to 4. And so I talked about this kind of earlier, and how you can probably get some smaller bars in here. Maybe go with like I don't like these bars because they have like a $5 range on them, or maybe even more. You can't really see any price action in them. $3.50 bar. Um, I am liking these time bars for this higher time frame chart. I kind of go back and forth, but we're gonna try with like 3-minute bars. So 1 to 0 was the full pull, and then 1 to 2 was the intermediate time frame full pull, and 1 to 3 was the higher time frame price ladder full pull. 1 to 3 and then 3 to 4 is that higher time frame continuation full pull. So if you're just taking them in pieces, it's 1 to 0, and then it's 0 to 3, because 1 and 2 are stacked, or 0 and 2 are stacked. So 1 to 0, 0 to 3, and then 3 to 4, or 3 back to 0, depending on which way you're swinging. All right, so there's some management opportunities in here for for shorts from anywhere. Uh, you can certainly use this as a trailing edge for a short from here. You could use this as a trailing edge for a short from here. If you could buy it, this would be a better, like not necessarily a better, but it would give you the potential to stay in the trade. Um, if you thought there were downside, I still have some downside ideas, but you know that doesn't necessarily mean it's going to happen today or ever. It just means that I've seen statistical examples, like repeated examples, where it happens like frequently enough to keep swinging in that direction. So the context is obviously down on the day. The potential is for, like say you got short here at 6,008, even though we have the potential to come all the way down to 96, we can go way past '08 and make your life really painful. And just because there's a potential to here doesn't mean that we're going there. And so there's always there's always the chance that uh, the market doesn't cooperate and you're left holding the bag. Like consider where we are here in the higher time frame, in the historic time frame. Like there's not a lot of reason to think that the market's just going to go down indefinitely right now. I know there's some people that think it might be, but I'm not one of them. Uh, so shorts are still counter trend, but you can make money in the counter trend side of the market. So eventually we come down, we find buyers somewhere, and I don't feel like this chart is updating here. This is just weird. Are we on full session? I'm gonna spacebar this thing. It probably isn't updating. I probably have to recount the bar. So at any rate, yeah, it wasn't updating because the bar grew. So we're at 6,003 now. Okay, now it's updating. So like nothing about this chart here says we're going down. I mean, we've got one doji candle up here and one down day candle. Like that isn't like something to hold for the basement. I couldn't take a trade and try and hold that trade all the way down to 879, even though that may be where we're headed. Um, I have to take it piece by piece because the potential is to get short anywhere outside of all-time highs and have price come up and take you out. So there's always that consideration, like how do we manage the trade so that we can stay in it. So we can see where the price checks are and anticipate where we might want to not put our stop if we want to stay in, and where we want to be out if we're not willing to put our stop there. And that's really maybe the best part about what we're looking at here is you can decide, do I want to hold for more? What is the upside potential? What is the downside potential in relation to where I'm at, and how much do I want to leave on the table? I just, even on this trade this late in the day, short off a 3-day back, I have pretty good. Oh shit! I closed my. No, I didn't. Um, I have. Where the hell does it say where the ticks are? I have 44 ticks into this trade here. Um, I didn't take this trade to give back 44 ticks to find out that it's not going down any further. So I have to manage this thing somehow, and it's a balance between how much do I want to give back and like what the realistic downside expectation is from the location I got in. So if if this is the downside potential, what's the downside potential from here before it comes back and expands range to here? Because that's the next upside check. And do I really want to give back 16 to 4 to find out if I'm going to come to here? Well, maybe I do, but I have, the an educated guess about where it's going to come. The rotation is going to come from. My guess is we retest, and if buyers come above here, then we come up to retest the retest up here. And if buyers come in here, then we come up to expand range up here. And so I can stop behind this micro, behind this micro, behind this retest, or just be done. Say I'm happy with low of day. Thank you very much. These are impractical. I just put them here for illustration, but you get it. You're picking up what I'm putting down. And I'm looking at these delta checks. So look at the conversation earlier. 2 days worth of delta is now below 3 days and 4 days. So not only is today's delta, uh-oh, uh-oh, internet dropped. Okay, hopefully I come back here. Looks like my internet went down. Gotta get my app out, my trusty app. Oh, internet's back up. All right, whew, short at 15. Good for you. Uh, let's see. Oh yeah, you took the 3-day back check. That's a nice entry. And so you're picking up what I was just saying. Like you have to make a decision. Like if this is the next upside check, do you want to give it all back to find out? Maybe you do. Maybe you got short 10 lots, you took 9 of them off and you're just holding one. And maybe that makes sense. Uh, or maybe you don't want to give that back. You know where the price checks come in and you can see what happens at these price checks. So here gives us here. This is a retest level. So we've already rejected it once. We should reject it again if we're going down. If we don't, it opens up the door to start running any stops that are left from these levels up here. Remember, the average schmuck in here from these levels back here, their shorts or their stops are baked into here. And so they're going to be fuel. Pop, 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 pop up to the retest here. Now, I'm not saying, that I would take a trade and put my stop above developing VWAP because I think it's going down to 4 days back. That isn't even something that's practical to me. I have to trade the chart based on where I enter from. And so if this retail retest fails, it opens up the door to squeeze out back to here. And that might be a place where I look to re-engage at that retest. Or even at this retest if there were enough room. So we only have 3 points down to the edge. This isn't where I really want to get short from anyway, but if I have room to an edge, that opens up the door for a potential to continue. Uh, yeah, good job on that short. I took the same short. I actually got out. I think I was trailing behind this VWAP right here. So I took my stop there and then I re-entered up here. Scaled into this edge. I actually scaled before the edge, but scaled into this edge and I still have one on and I'm I'm behind the entry retest back here because I do have the 4 day back and I'm kind of in that situation where on the day I have 239 ticks locked in on not locked in on a day. That's including my open trade equity here, which I could give back, 40 of them. But I have a fair amount of uh, equity locked in, and I have a downside target, so I'm starting to feel like okay, I'm willing to let one lot ride to see if we get there. But of course, I will, as we come in and do this, I will be looking, for a trade management opportunity. This was coming into that liquidity that we have on this chart. So the liquidity that we saw right in here, we don't have that liquidity anymore. Now we have kind of a free fall back to here. So I'm a little more willing to hold on because there's no levels that I expect to find buyers at unless they just show up, you know, on news or something. Where did you where did you have your stop? Right here, trailing down here. A lot of times what I'll do is I will let the retest happen and then let price move away from it and then I'll drop my stop onto the retest. And you'll see after you trade this way at 10 a.m. 10 at 10 a.m. here. Here? Oh, $10? Oh yeah. Yep. So I'll finish what I was saying. After you trade this way for a while, you'll see that this retest is is respected a lot of times. And so what I'll do instead of trying to trail my stop down above this edge, I'll wait for the edge to get tested. So if this is my stop, I'll wait for this to happen, and then when it moves away, then I'll drop my stop. Wait for that test to happen, and then when it moves away, I'll drop my stop. So I look for opportunities to manage the trade after price has done its thing with the anticipation that we're going to see a response here because we saw the response here. So we should see it here. And now I'm I'm stopped out at the same place you got stopped out, but I still have potential down to here while you're out of the market. So we both have the same stop, but I let price do its thing and then I took my stop position afterwards. So that's kind of how I play it. And it might look something like this here, where you put your stop in and it pulls away and you drop your stop and then you get taken out anyway. I mean that happens a lot. But it gives you a fighting chance to stay in a trade. And so you get run over too. I mean, you see buyers come in and when the buy switch is on, the buy switch is on and they just buy this up and completely run that over and you might be sitting there holding your stop, in thin air waiting for it to respond and now price is up here, and you've given back the whole trade. So there's upsides and downsides to it. I don't think you can lament, taking a stop anywhere. That stop is there to protect you from price running up in your grill. But you get to a point where you start to feel, you know, the market for like what direction it's in, what the context is. I mean, just look at the context of the day, just like this. Look at the pre-market analysis. Look at your pre-market analysis, which was spot on, by the way. Um, and look at where we are. So we've fulfilled the 1 to 3. We've rejected the 3, which opens the door to 1. Doesn't mean we're going here. We could go back to, or they open the door to 4. We can go back to 1 before we go to 4. That's perfectly reasonable market behavior. And this is a really good reason why you don't have to lament that stop, because I'm probably going to get taken out at the same spot you did, unless I'm willing to have it up here or here or the retest, which is the retest is kind of the area where we are coming to. So if you got short and you didn't get your entry wasn't until here and you got a scale into this edge, which isn't much, a couple of points, you're not going to buy a stop up to here. Like I don't have enough faith that we're coming down here. Actually feel like we probably do come back up and rate retest this and maybe even range expand up to here and maybe even go all the way up to developing full and rotate up. I don't know. I mean, Jesus, we're counter trend. Like shorts today are counter trend to the historic and higher time frames. They're in trend of the intermediate time frame and in trend of the developing time frame, but all good things come to an end. So we have to have a willingness to find out if we're right, but we really don't know if we're right, and we won't until the end of the day or until the trade's over. So watching this here, we've got sellers from here and buyers from here all necking down in here. If this breaks the upside, range X up to 12, 13 and a half, and a retest at 14 and 3/4, all possible. And above that, range X up to 16 and a half, and then full pull back to developing zero is not completely out of the cards. So no idea other than the context is down, and if I'm going to try and hold anything, it's going to be to the downside, at least right now. Now, if this is all taking place at this liquidity down here, then I'd be like, oh, okay, well, maybe we're done for the day, and I'd either tighten the leash up on the trade or um, be thinking about the long side. But like because we're kind of in thin air here, I mean, aside from the liquidity that we pulled out of the market here, the the price check is lower, and I kind of feel like it's a little bit like starting a project. You're gonna go down to your basement and start building, shelves. Like if you start it, you're gonna finish it, right? Like you're not just gonna leave the tools and shit strewn all over the place and like half cut lumber and saw blades for your kids to play with. You're gonna finish the project. And so I feel like we've started building some shelves here. It doesn't make any sense to just stop building them and scrap the whole idea. I feel like we have to finish building them. So our 2 day delta dropped below 3 and 4, but our 3 is still above 4. So 3 days delta is still holding on a little bit higher than the 4, but they're all going to start moving together as they cross over. Then there'll be balance up there, and that would be like a target to shoot for. Go clean them out. When the buyers come in, eventually they will. So we've completely taken out every target on the map. We got overnight high, right? I think we did. We sure did. And overnight low and everything in between. And you can see the delta. Don't worry about the numbers here so much on this. In fact, I can probably turn those off. Uh, they're irrelevant. So if I put 10 days worth of delta up or 10 days worth of bars up, these numbers are going to be different than if they're 9 days. The difference, the important point is the relationship from one to the other. So the fact that the delta today is less than today plus 10 days ago is saying that like we've taken every buyer out of the market delta wise from 10 days ago. And when these completely reorder, so 10's on top, 9, 8, 7, 6, 5, 4, 3, 2, 1, that would be a full-on bearish look. And right now we're kind of mixed. So we have some buyers, we have sellers today versus buyers from yesterday, but we don't have a bearish market. Like predominantly, we have 1 and 2 that are reordered, but 3 is still above 4, 5 is still above 6, 6 is still above 7. Like none of that has changed. It's not a full-on bearish bullish look, but it's still higher time frame bullish, historic time frame bullish. So we had range X here, potential to range X here. Like there's levels in here in between. You, I don't think there's a way you can. Who knows? You know, it's a couple of ticks, 9.25 to 10. So tough to trail a stop like that unless you have to. And then if you're trailing stops that close, maybe the thing to do would be to just wait for another opportunity up higher. Decisions, decisions. So we're coming down into that 6,000 edge here. This is where the liquidity is. I don't know if that's a, I don't, I think that's a call wall. Uh, I think somebody said that this morning that that's the options call wall. Let me look at X. But I think if we drop below the call wall, then they start hedging in the same direction as the market. Yeah, it's a call wall at 6,000. So if we drop below the call wall, then market makers will begin hedging. That's going to push the market down lower. So the expectation is that uh, calls will start buying up. Uh, will start buying up at 6,000. If they don't, options contracts are going to begin liquidating, and market makers will then sell. Uh, they'll sell calls or buy puts. Uh, that's going to push this market down even faster. So it should hold this level, but if it doesn't, it can it can move exponentially faster. And that's a 6,000 call wall on SPX, which I don't know what the math how the math translates. It's not a direct correlation to futures. And it doesn't really matter, like to me as a trader, because my call wall is 4 days back, and my put wall is right here, 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 and here. I just made that up, but they are like they're my lines in the sand. So to me, it doesn't matter. It's just like why is that liquidity there? It's there because the call wall is there. And once we get below it, if we see selling, hard selling after that, then this thing's gonna melt, and I'm gonna look for 4 days back. It's that simple. So the retest here, a little sloppy, but it held. We could actually say retest here, but the liquidity is here. And then we have another retest. Oop, another retest here. And now coming into that 6,000 level, and I think uh, I think you have to respect that level. Um, you can slow roll it for sure, but if that's the location that options traders are looking at, it absolutely has the potential to rotate up off of that level and disintegrate whatever MFE you have into this trade. So we have 606, 609, and then range X up to 10 and a half. got short-term liquidity coming into the book all the way down to the 4-day back now. 590 or 990, 6,000 to 990, just short term. Still have 332 at 6,000. Okay, watching that liquidity at 6,000. Want to see 6, 7 hold on the upside, and 6,000. Want to see sellers hit that hard. All right, 6K. I'm not giving it much here. There's a delta, little micro delta check at 3.5. That's it. That's my that's my target. I'm looking for a rip down here though. If we get some follow through to the downside, we see the delta or the call wall fall. So previous VWAP at 96, and the full check is the full VWAP, and that's a little bit lower here. That's down at 984. That's going to take some concerted effort to. We got to liquidate these options contracts. We need market makers hedging in that direction, and we're going to need willing sellers to come in late to the party here. So it's going to take a kind of a perfect storm to make it on this push here. Potential up to 6.5. Starting to split hairs now. Think about the shorts that came in on these consolidations here, 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 and here. Like how late they are to the party. And maybe they got a couple points out of this leg down, but whatever's left of their trade is at risk. It's a moment of truth. Let's see it. Sellers hit this hard into that 6K liquidity. That's the downside target. Everything else after this is icing on the cake if we can get anything out of it. There's a stop run. See if we get follow through here. Oh yeah, baby. The hedge-a-mongers. Alright, 6,000's got to hold where the trade's at risk. So there it is. Look at that, beautiful. So now the call wall has been breached, and looking at 984 for a downside extended. So now these options levels are important. The fives and the zeros. So 95, 90, 85, 80, because each one of them represents a strike price that market makers have to hedge on. And I'm trailing like really tight here. So I'm giving it this little move up, and then I'm going to grab the top of this. I picked up an extra 6 points above my original target. So as soon as this makes a new low, then I'll grab that top. There we go. And same thing with this one. New low, grab the top, new low, grab the top. And there, grab that top. So this is just micromanaging. I'm this is getting every drop out of the turnip here. 85 is the downside target. flush come in. Okay, there's the poke up. I'm still at the last one at 93. Oh my god. Uh, 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 oh, I'm out. Okay, so I gave back 4 points there, but I picked up 7 on the 6,000. And we still have 84 and 3/4 is that downside extended target. So potential to come back to here, range X to here, range X to here. We're going to call that the retest for all intents and purposes. And that's it. Okay, hopefully you caught a little piece of that or still have a piece of it. That was pretty clean though, the whole way. The perfectionist part of me wants to hold, wants to be in it to take this out down at 84. There's a part of me that's a little disappointed that I didn't have a wider stop on that. A very small part of me. Well, you don't have to get back in. You don't have to be in every ripple of the market. But a bigger question is, and we still have downside targets below us. So like this is one target. The next one is down here at 56. The thing is, we just range expanded from 3 day back check down to 4 day back. So it does make sense to try and rotate up. It definitely doesn't mean that we're going to, um, but the potential exists. Well, hopefully you learned something about managing it and like how to activate and like where to look for activation points. You got in probably at the same spot that I did and probably for the same reasons that I did. So I think you're spot on because I think I was spot on. But like I don't know, man. I used to take a lot more trades than I do now, and I used to I used to be a lot less willing to eat a rotation, even a small rotation. So we have an opportunity here to see potentially see a reversal set up uh, in the session, and maybe just kind of look at what a reversal looks like once we hit a higher time frame level. I don't know that we're going to. I would still be leaning to the short side and really like maybe even considering an add if we come up and take out this retest and this retest and find sellers. If we don't find sellers at this retest, then I would say we might be done for the day and call this a full pull. I mean, we came into the liquidity. My guess is the market's going to grind this out and it's coming down here as a matter of efficiency. It's coming down to get the liquidity, but 86 and a half and our full pull is 84 and 3/4. So pretty dang close. If the hoppers are full and they don't need to go down there, I don't begrudge them, missing the low by or the target by a couple of points. Yeah, just be careful on the long because of the context. Like have a really good reason to engage the long side. I'm looking for the long too, but before I'm looking for the long, there's probably another short in here. So what you can do if you want a like generic way to think about a long, go back to developing VWAP the last time we were at developing VWAP or 0 day back and drop a manual. I'll make it this one. So we're at 0 here. I won't even consider a long until we get above this and then hold the lower edge. So why here? Because this is the halfway point between all of the sellers that poured in here and the buyers that were above that. So we're splitting the difference. So this is kind of my over-under, the generic over-under. And ideally, it's a retracement to the 0 day back that's that kind of sets up the potential upside. But we're going to have to see, for me, we're going to have to see a pretty good impulse up. And then that lower edge is going to have to hold. And so when you look at it like that, the long is kind of a ways out yet. I don't even know where that VWAP is, but I need to put it on top so I can see it. Dang it. Oh no. Like 4,000 VWAPs on my chart right now. Oh my god. Sorry for snorting. Yeah, see we're still going down to that 4 day back, but I'm happy I got out where I got out. I just I'll wait for a bigger rotation up. Okay, let me get these things up here. Okay. Oh, what the hell? Oh, I was gonna say, buried it again. Okay, so this breakdown from 0 day back is the over under back to 0 day back, but we're going to come up, test it, and then I want to be looking at the lower edge as a potential place to get long from. So that's how I'm gonna sort out the long potential. And because this is just a line on the chart and the actual volume is right here at this edge, that's what I would look to take out. So this is a generic representation of like the area where I'd be looking at, okay, context shift if the lower edge holds. And this thing can go up from here. I don't care. I like we had a good day trading to the short side. I don't really feel like I need to like catch the next ripple to the upside. I can let this thing reset, come in the ETH tomorrow, see what happened, and do it all over again. still think we got some downside potential here though. And I say that, just because I look at what we've done here, delta wise. Like, yeah, the market went up, but like we just left behind a lot of a lot of buyers. We've taken out 4 days worth of VWAP price action, which is pretty significant. The ES is selling at a rate of 3.5 to 1. NQ is selling at 1 to 1. So one seller for every one buyer. Screens are completely red. All sectors are red. Nvidia, Amazon are the only ones that have an inkling of upside. Tesla rolled over red. Broadcom is red. Nvidia's up 1%. Amazon's up a third of a percent. Netflix is up nearly a percent, and Amazon's up a third of a percent. Everything else is red. Microsoft is half a percent. So the market's saying something here. The euphoria has come to not a halt, but at least to a pause. What's going on with this chart? 86. It's like this chart stalled out. I don't understand why it's not updating. Oh, maybe it's because they're the continuous contract bars. We'll try just a regular ES. Alright, well, we got the 4 day back check here. The next stop is 5 days. If we go lower, that's down at 55. I would just caution that in a bull market, and I would say we're still in a bull market. This is just a regular and to be expected pullback. In a bull market, um, we typically don't fill like the entire higher time frame pullback to here in a day. If we did, and it's not saying we can't, but if we did, that would be speaking about some deeper weakness than just a ordinary pullback. So knocking off a day or two is pretty tip. And it can do it a day or two at a time. But if we were to see, a pullback all the way to the historic upper edge all today, I would have some serious concerns about this bull rally. that wouldn't make it bearish, but I would have some concerns about it. Getting a nice impulse up here. And we've taken out up to the first levels. We took out the easy. I gotta get some notes on top here. We've taken out the easy late sellers. So that's the squeeze. Six points back to that lower edge. And if the lower edge fails, then we have 85. If this doesn't fail, then we can go back to the retest up here. Where if this retest doesn't fail, then all the way up to here, and then we're talking about that potential long, the first inklings of a long setup. And I'll even say if we come up to here, that's still a short back to here potentially to finish this move down to the 4-day back and maybe down to the 5, but no idea if, when, or how. 6,000 has to hold at the range X or potential to 603. Alright, we got our retest here. This is the first time we've been back since here. Got to get through 95 and 93 on the downside, and buyers here above the swing, range X, retest above. Kind of off the edge of the world here, delta wise. I put some moving averages on, dress it up a little bit. Is that 250? So upside delta is going to break out of this edge. Downside delta is going to break out of this edge. We may be done on the day to the downside. We cleaned out all the delta on the heat map. We have one more check down at 90, but that was put in pretty late in the day. That didn't come in the book until 11. Showing some strength off of the bottom here. The expectation would be a test of this edge and no test. Still pretty tough to get short off of this. But above retest opens the door to that drop anchor, the manual drop anchor, and then a retest of 11. Did you get your long? Oh yeah, good for you. I don't think there's anything wrong with that long. We came down into a higher time frame level. We cleaned out the liquidity. I think that's kind of the like we stripped the book of liquidity. All there is now is short-term liquidity in here. We're back inside the call wall above 6,000. And then we'd look to go to the put wall on the other side. I mean, there's still liquidity in the book on both sides here. There's liquidity down to 80. 1302. Yeah, I don't think there's anything wrong with that. cleaned out the retest, and now back to the range X and our drop anchor.